Get out now. I'm your host, Steve Van Metre, and thanks for joining me today. And Goldman Sachs is warning investors that the machines are about to unleash a tidal wave of selling, which could send stocks sharply lower. Let's head over to Goldman, where we picked today's story up as we get into the technicals and momentum of the market and see where the opportunities are at and where stocks could go if Goldman's right. If we look at the CTA flows, or the machine flows, this coming out of the Goldman Sachs desk over the next week in a flat tape, assuming stocks don't go anywhere, there's going to be global buying about $5.8 billion, but notably only $759 million of that is going to be in the S&P 500. Market goes up. Notice not a whole lot of buying, a little more to the S&P, $5.1 billion in global equities, 1.1 of that to the S&P 500. But now over the next week, look at the down tape. If the market sells down, you're going to see $21.4 billion in equity selling, and out of that, $10 billion, nearly $10 billion S&P 500. So you can see that will have a negative impact on the broad market. But this is the warning that Goldman wants you to be aware of. Over the next month, so going into mid-March, flat tape, there's not a whole lot of buying. Now you're seeing the momentum start to tap out here. $2.2 billion global equities up tape. $18.6 billion global equities, but get this, down tape, $217 billion of selling. Of that, 44.6 will be to the S&P 500, and they note that around 4,000 are the key levels of the S&P 500, which is something we've talked about in this show for the last several weeks of warning people. That's the level where the machines will look to unload in a big way. Now let's look at some other charts from Goldman, and we'll get into some of the other machine positioning that's validating what Goldman's saying here. This was a rolling 10-day change in global CTA positioning. What we notice, it's starting to peak out and roll over, and that is a warning sign, because what you've seen now is, if you look at systematic positioning where you have CTAs, risk parity, vol controlled, all these mechanical moving strategies have levered up. As we've talked about on the show, the market hasn't followed, so you'll notice momentum is starting to wane here, and that's exactly what you would want to expect the machines to do. If momentum doesn't follow higher, they're going to start cutting and starting to sell into their gains and capture that and then position downward depending on how big the market moves to the downside. We note from Nomura, the data is very similar. They're already starting to sell as well. If you're wondering why this is blurred out, if you're new to the show, well, I don't have permission to show their report. It is proprietary. How about TD Securities? Their report also proprietary as well. They're starting to back off their longs again. As we've noted and kept on this show for the last several weeks, 4,200 is buy. That's high. 4,000, you're going to see a lot of selling coming. And let's look at now the technicals and momentum of the market, starting out with the S&P 500, looking at the largest traded ETF, SPY. Momentum remains positive, but there's starting to be a shift here. The relative strength indicator is coming down. We know at 40, it starts to go. That's where we see momentum head negative, so we're seeing it move that way. The MACD is already crossed to the downside, so it's got a negative cross. Momentum Timer Pro is still holding 29 consecutive daily buy signals, but what I'll forewarn you is maybe the Monday report will start to give you some indicators on that. So the Pro subscribers to that report, you'll see that. We're going to look at my CTA report, why this is so important, because when you look at machine positioning, my report, you're going to see it's right on it, and you're going to want to be a part of that. Again, there's a link in the description for both of those reports. The CTA still, I got just a handful left at $20 after the coupon, and Momentum Timer Pro, there's still a few coupons at half off. So here, let's look at what we originally made the call January 24th, buy it open, 398.88. Now we're telling you, tighten your stops, look to close these positions. If the market heads down, try to hold on to some of your gains. Friday's closing at 407.26. Upside target, we'll look at that in a moment. Downside target at 392. Here's my CTA report. Pro subscribers, I can give you a little preview. These numbers here are likely to change on Monday's report when you get that. All right, let's take a look at the charts now. And what is going on here, where I think there's going to be some opportunity, is we're potentially going to see a sell down into the volume profile, which is on the 1-year chart. This is where the most shares have been traded. It happens to be the same at the 6-month and the 2-year window. And we pointed out that we've got a potential inverse head and shoulders bottom here. Left shoulder, head, right shoulder. So if there is a bit of a sell down here, what I want you to understand is now we're selling down to the top end of the 200-day moving average, this tan line. So that is actually bullish. If this thing holds around the 200-day, even if it breaks a little below and then bounces off, this is bullish. This is where major rallies begin. So keep an eye out on that. I actually think there's a bull case here. If that breaks down and heads a lot lower, then watch the machines follow suit and sell. How about we look at the Invesco QQQ Trust, or the NASDAQ 100. What do we know? Momentum is still positive, but I have a hunch this will be changing on the reports on Monday. RSI is at 55 and heading lower. MACD's got a negative cross. I imagine Momentum Time Pro is going to flip this to a sell signal any day now. We know there's no position. I don't know why it says no position. I forgot to take that off. Buy at 130 at 292. Titan stops. Look to close position. Friday's close at 301. Again, I still think there's going to be a potential opportunity to come back in, but what I'm suggesting, if you've got some gains here, you may want to hold on to that. Again, on the Pro subscribers, depending on which report, the CTA report or the Momentum Time Pro, look for Monday to see a change in positioning leading where those machines are headed. Now let's take a look at QQQ, because in S&P, the bull case is it gets back up into here and then sells off again. Or the bear case. The bull case is it sells down and finds buyers. How about the NASDAQ? Similar story here. It's crossed the 200-day moving average. Wouldn't surprise me if it comes down. Wouldn't surprise me if it broke a little below there and came down to this 283 range before it finds some buyers. If it does that and breaks higher against the 50-day or 100-day moving averages and crosses back through the 200-day, again, very bullish setup will pull people back into the markets in a big way. All right, let's take a look at bonds now. What have we noted? Those of you who are on the Pro subscriber reports, we've talked about it in the other shows too, that they're selling in the bond market. The machines are selling. Nomura is all back at max short. We know TD Securities, they're actually they're shorting, heading back down. And what do we know? Any rally in price will trigger a short covering at this point because the machines are heavy short. And one thing you notice, if you're following the CTA report, if you're a subscriber to this, you already knew, because this thing was leading and the machine positioning down. So you already knew that. We've got 9 consecutive daily sell signals on Momentum Time Pro. What are we looking for here? Momentum negative, no position. Wait for a close over the 200-day, or wait for the machine positioning to flip and start short covering, and then take a look at that. We targeted the downside at 103. Boy, it just broke just slightly below that. So we had that call there pretty good. Let's take a look at TLT. Again, at this point, I would be waiting for a break on the 200-day moving average. You look at the 1-year chart, there's a lot of heavy selling still right here at 106.67. Potential retest of this bottom back in late December is in the cards. Otherwise, a rally here will pull the machines back into this sell zone. The question is, are sellers done? Once they are, this thing moves a whole lot higher. All right, let's take a look now at gold. Of course, we noticed that gold, big rally. Our reports flag that. A lot of you participated in that. Now what are we seeing is starting to back off on the gold positioning, that from TD Securities. Look at this. You need to see a move over 1850 before the next round of buying. Well, as far as the selling goes, watch this thing. If it breaks under 1820 or so, you're going to see a whole lot more selling in gold. If you've got a gain in this, it's time to capture some of that. That's the suggestion I want to make to you. All right, let's go and take a look at our screens here, because what have we noted? The fast machines on the CTA report already told you when to sell. They're sitting at max short position, saying that, hey, this could go down. The longer ones are starting to follow and cut their long positions. Again, suggesting what you should do. We had a buy it open on November 30th at 163.69. Friday's close, 171.26. We told you last week, tighten your stops, look to close positions. So hopefully you did, because because momentum is negative. And RSI is at 40. That's negative. MACD, negative. So where do we know? We got the CTA positioning negative. We got Momentum Time Pro saying it's negative. We got everybody here saying it's negative. But where is the opportunity to come back into gold? Well, if we look at GLD, you've got it coming back down towards 200-day moving average. And that's got a positive cross forming on the 100-day going upward through the 200. So it wouldn't surprise me, because you'll notice there's a bit of volume right here, not a ton, but a little bit, that would suggest that if sellers come down here and this holds a 200-day, it is bullish. Because I want you to go back. Let's go over here, 5-year period. We see downside cross to the 200-day. It finally crosses over. It finds support, and then it takes off. So really, the fact that this thing comes back down here to a level that in the last 5 years, you see there's a lot of buyers sitting right there. It tells you a hold of the 200-day moving average. Even it crosses a little to the downside, no big deal here at all. Keep an eye on that for sure. Let's look at gold futures, and what do we see? 1820 is right around support. Look for some machine selling that could take it right down to its 200-day moving average. And again, if it holds somewhere right around there and starts to rally off of that, you want to be a player on that. Now let's take a quick look at gold miners. We don't often talk about these. We haven't had time to on the show, so we're just listing no position because I kind of just said, hey, if you can buy the dips, you should. So we're not going to make any claim on that. But notably, look at this. The CTA report covers a bunch of ETFs that you trade. So you could see how the machines would trade the ETF, even though they don't. You would note the fast algorithms are 100% short. The slower ones have been capturing their gains. We noticed that Momentum Time Pro, 11 consecutive daily sell signals. So you had, depending on which report, or if you're subscribed to both, you knew what was going on. And look at that, RSI at 33. So opportunity starting to potentially knock here as momentum is negative. Let's take a look at GDX and see where I think it goes. Is back down here to around 26.82, right here in this little zone here. If price comes down here and holds and rallies off and again crosses back through the 200-day moving average, and again, I want you to see at some point it crosses that 200-day, you see price just accelerates to the upside. Let's go back here. We see here's a cross of the 200-day here, down way down here. It came back reconfirmed and then skyrocketed higher. So again, if this thing goes to the downside on that and starts rallying up and crosses again through that 200-day moving average, you definitely want to be a player there, because look at the RSI. It's getting down to oversold area, and look at the MACD. It's not quite it's not starting to bottom, but if it holds, price starts holding up, look for that. Lots of opportunity there coming. And how about we look at the dollar? Don't want to leave it out as well, because I want to show you how the reports nailed the flip on the dollar. TD Securities is now noting that their machines are starting to go long the dollar by shorting other currency pairs against the dollar. How we have 11 consecutive daily buy signals from Momentum Timer Pro. Remember, momentum was negative not too long ago. Now it's positive. MACD positive cross. RSI at 60. We didn't list this as something to bother trading. And again, we missed Super Bowl weekend because, well, no one probably would have watched. Downside target, we're holding at around 27.83. We came very close to nailing the bottom there. Upside target at 28.38. But look at this. We see the machine position. Remember when this was 100% short? And now look, it's turned long. Remember when this was short too? Now it's flipping long. And both reports, Momentum Timer Pro, CTA Timer Pro, got this thing. Let's take a look at the dollar here. UUP finding this bottom. So that's one of the ways you look at this report. When it gets short and you start to see it move up, you can start adding positions. I think the 200-day is looking at what we want to see as resistance. I expect the dollar to rally up to that point. Looking at DXY, same story here. I think you got a potential move to 106. If it gets rejected there, then all bets are off at this point, and you'll see a reversal in the machine positioning again. But I think these are all short-term moves, both in the equity market and the bond market and the currency markets. But watch those 200-day moving average. Those are key. Unless we see a major breakdown over the month and Goldman starts to unleash a massive amount of selling along with the other CTAs, then all of those bets are off. But in the short term, let's see what happens next week. And we'll be back on next Sunday as we cover the charts again. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.